Hello, everybody. Brian here from quantlabs.net. Today is July 30th. You may get this video a bit delayed on YouTube, that is. Thanks for everybody for joining. I want to talk about the HFT ebook for now, very fast. It's out. If you're not on my email list through the learn at quantlabs.net.com/registration, link below, you might not be able to get the book. I'll be emailing everybody out today where you can get it and personal as well. And moving forward, when you do sign up next day or so, when you click this, pay attention to the thank you page once you press subscribe because you'll get the link offer for the ebook right there and then. Okay. If you get this video after, let's say, tomorrow after the 30th. Anyways, I wanted to introduce you to it's fine and dandy to talk about C++, HFT, all that low level programming, latency. And one thing we need to understand is what are we trading? Um, if you go through the book, you'll know I don't really talk about asset classes or really trading and strategy development at all. Mostly focuses on the technical um, for these type of systems, but I do want to talk about the popular asset classes that most people use for these type of systems and the HFT firms and all the other firms that are involved in this space. In here, if you look up on YouTube, you see Davis futures and options. In there, you'll find two playlists. One from 2015 and another one from, I believe it's 2003, somewhere in there. Anyways, if you go through this, this is a very, very good course, free course. Let's say if you go with the 2015, the most up to date, um, you'll see here all the different topics you go through when it comes to uh, this asset class, options and futures. This is very manual, as the humans did it. Goes right back to the history of the futures market, coming out of farmers in the 1800s and how they opened up the futures market in Chicago, and goes into details on how the mechanics of both options and futures work. I think this is a fantastic place to start, so you can understand the mechanics of basically what most high frequency trading firms use. As a result, I'm planning to kind of go through this. I've done it very many years ago and focus on the algorithm side of these markets because they're just coming in fast and furious. They're Uh, as I said, this covers most of the techniques used for both options and futures. Mostly options is used for high frequency trading. Also, is a very good indicator, early indicator of where the equity markets might go for particular stocks or just the indices as well. So it does cover both. Just to give you a hint, about 80% of the trading might be done in options. 20% of it might be done in futures. There's strategies to know which future option you want, so on and so forth. It does cover the Black Scholes as well, and among other algorithms that can come out of this. I find this is a very great course for quote unquote quant, early quant, you can call it. Also, it covers different algorithms you'll figure out as you go through the course in terms of it's just the different mechanics of it. I can go on and on about it. So this is for the standard futures market coming out of Chicago. That would include agricultural, financial products like treasury, currencies, commodities, and the stock market indices. Give an example here. Um, now, I'm not mentioning Bitcoin here. I'm sure you can use Bitcoin here, but I just wanted to bring you to real most active uh, all futures contracts available right now during the working day on this Tuesday. And just wanted to give you just a highlight where the markets are at on Yahoo. And again, you can see here that the markets are pretty well down. Crude oil's down, gold is up, euro Some of the forex is down as well. Silver's up. Bitcoin's down, and as well as the foreign international markets like the FTSE and the Nikkei out of Japan. So coming back to this, you can see by volume what is the most popular. So right here by volume, this is important to understand what most people trade in the markets and the most liquid, because the liquidity and volume is the most important when it comes to high frequency trading. I've done it myself in a simulated environment on crypto using Binance futures. Some of you may not know, but back in the early days of the peak of Bitcoin and Ethereum, virtually, now I'm going to stress this, virtually, with one Bitcoin at the price of $16,000 and around there, within 3 months, 4 months, using the quote unquote high frequency trading techniques for that, I was able to build up a virtual uh, portfolio of about $1.4 million from one Bitcoin early November, and it ran it right through till about February until the peak. So you can use crypto, but I just want to stress, when you're on an exchange like Binance, um, you can do really well on a crypto exchange. But this type of course has nothing to do with crypto futures markets at all on those exchanges like Coinbase, Kraken, and the like, and even Binance, because back in those times, Bitcoin was pretty high volume. So I say that because in here in the top ones, you won't see Bitcoin in here at all. So typically, what you'll find here is the micros, the minis, the E-mini of the Nasdaq, S&P, the 10-year note. That's pretty popular. 5-year T note, 2-year, and then you get into the crude oil. That'll probably be a lot higher if crude was performing better. And then you get into the Japanese yen, as I said, with the currencies, uh, euro, and then you get gold, natural gas. Then you get the Russell, corn, soybean, Dow futures. So if I kept looking for crypto here, okay, so you can see here the volume is at 1.7 million, and in around here, natural gas or gold at 154,000. But if I go in here into, let's see if currencies has the, uh, so doesn't look like it used to work the way it was, but see more. Okay, let's see. We should be able to see the crypto in here, the Bitcoin and so let me just go back here. But my point here is that you would think that crypto would be a lot higher. Um, Currencies should be under here. If you remember the volumes here. Yeah, here. So here's the currency. So you can see here we have the Ethereum micro. Remember, I said at 174,000 was in around what where gold was. So you can see here the volume's only at 32,000 for Ethereum. So you don't see Bitcoin for some reason in here. Oh, here's Bitcoin right here, and Bitcoin, because it's down, I guess it's really got knocked back at 5,000. So you can see when you compare the traditional futures market with both whatever a U.S. stock market versus Bitcoin or Ethereum, that they're very tiny compared to the other mainstream future products. So I just want to stress that you need to trade where the volumes are in order to be successful. Because if you don't have the volume, you're probably going to have more unneeded volatility in those markets. So I just want to highlight that. So coming back to the book, and again, you can get it here at quantlabsnet.com under Learn. And what I'm proposing to do is we've got a lot of people, a couple hundred people new via YouTube uh, and some other traffic sources have signed up to get this book. And as a result, I'm wanting to build out a private community. In here, I have on my quantlabsnet.com here, I have a private group here. Uh, this one right here under Quant Elite Programming. So this group will be part of that community. So you can create your own posts when people come in. What I want to highlight here is the important aspect of a community. So I go through scan multiple sources of anything programming related or quant trading related, including algos, questions, and stuff. And I post them for the last couple of hours. Also includes LinkedIn, Wilmot.com, and so on and so forth. In there, you'll usually find news sources of information that I think might be relevant for this kind of group. So I'm starting to do that in the last few days. So I want to build out a group around this to help out those that are more advanced in this programming space and try to help out people as well in the world of that are new to programming as well. In there also, as part of the group, I have three groups actually. I have a free one, which is my programming. Sorry, there's a programming one. There's my analytics one. So you can see here, I go through the markets, live trading, and various news sources in my analytics. Also provide a news group as well, which is free. This one right here. And this one includes all the news. I try to do that, get posted every day as well. So I want to build that out. And one of the other things I'm thinking of doing is providing basically a journey for those that are fairly equipped with it from a programming standpoint, getting into the basics and then into the nitty gritty of high frequency trading and using the book that just came out as a source, as a roadmap for all those topics. That's going all the way from high frequency to quant and all the other topics covered, specifically in C++. Because once you start learning that, there's two paths you can go. You can do that, obviously, for career. I think it's very competitive. If you're coming from an Ivy League school like an MIT or, I don't know, one of the top British schools, I think you probably have a very likelihood of getting a good job. Wherever your schooling's coming from, you have to be top notch. The school's got to be good. Most likely, you probably have to be at least a master's or a PhD level. If you have that, great. Um, but the likelihood of most people achieving that and getting into these type of firms is pretty low. So, as a way to help people, knowing this stuff is very important. And even from an independent trading standpoint, it's good to have being able to analyze the options market, figuring out where it's going and the different techniques, specifically when it comes to these courses I've shown you here at UCS Davis. So I just want to show you that, highlight that again. If you want to know more, join the newsletter, I guess you could call it, and you get that book as well. I'm also focusing on TradingView as well to make life easier for other people because I notice a lot of you are really programmers, students in the field as well, on top of other people, just general traders, maybe non-technical. So we got to find ways for people. And I've already had that for a while now for TradingView as well. So there's different various ways I can address this all. So I just wanted to let you know, and that's the asset classes to really focus on in the futures and options, but specifically currencies, commodities or energy, financials, and agriculture like grain, and the market indices and livestock and the metals as well, and all that listed along here. Okay, so leave it at that. Thanks for watching. Have a good day.